Click the bell icon to get latest videos from Ekeeda.
So now we'll be going through a specific problem which will understand how to solve as per the specifications which were mentioned in the previous video. Let's go through the sum first. Preparation of bank reconciliation statement. As per the sum, Mr. ABZ Limited shows a balance of 32,500 as per his cash book. That means a favorable balance. Now, which means your cash book is correct and the passbook is incorrect. So you'll have to prepare the sum according to that. Now, the transactions which are showing the difference are as follows. Check deposited but not cleared rupees 8,900. Check issued but not presented rupees 12,500. Bank credited dividend of rupees 5,000. Bank charges rupees 400. Let's go through and find out the balance as per the passbook, as per the specimens which were provided in the previous lectures. Let's go through that. So let's go through the sum which was already shared to you guys right now, and we'll prepare the presentation here, we'll prepare the format. We have particulars here, we have amount which has been already mentioned as 32,500, which is the favorable balance as per cash book. Now that your cash book is already correct and the passbook is already wrong, so we have already mentioned it here. Cash book which is correct, passbook which is wrong. Now all the transactions which were mentioned in the sum has to be calculated as per the transactions and as per the favorable balance, which is the starting point of the cash book. Now starting point being the cash book, the end result will be debit balance or credit balance as per passbook. So if you have credit balance as per passbook, how do we prepare this thing? The first transaction which mentioned, Mr. ABZ Limited showed that the check has been deposited but not cleared rupees 8,900. So if check has been deposited, that means the cash book transaction has been already done. Now this transaction refers to passbook now. So if the cash book balance or if the passbook balance needs to be tallied, we need to understand which book this refers to now. Check deposited rupees 8,900 but not cleared. That means this transaction is already done here. It should have been added here. So we'll go ahead and check whether this transaction needs to be added or needs to be credited or subtracted into the books of accounts, into the bank reconciliation statement. So what do you think? Check deposited rupees 8,900 will be added or subtracted. Now this transaction increases the balance of your passbook. That means it has to be added, but it refers to the wrong book, that is passbook. That is, you will be doing the opposite of it. That means you will be subtracting the amount. So as per the formula, if the transaction is adding or subtracting but it refers to the wrong book, then you do opposite of that. That is, if it is addition, you do subtraction. If it is subtraction, you do addition. But if it refers to the favorable book, or if it refers to the correct book, and if it is adding, you add the transaction. So now as this transaction refers to the wrong book, and if it has to be added, the eventual result will be subtraction of the transaction. So 8,900 will be recorded on the minus side of it. The next transaction stated, check issued but not presented for payment 12,500. If the check has been already issued, that means the cash book has been already recorded. The only pending which has been supposed to be recorded is the passbook. Now if the check has been issued, that means it is supposed to reduce the balance of your passbook. So if it is reducing the balance of your passbook, this transaction now refers to passbook, which is wrong. So you add the transaction, which is as per the formula. If the transaction is wrong and if it refers to the wrong book, you have to do the opposite of what you're supposed to do. So if the transaction is supposed to be subtracted, but if it refers to the wrong book, then you add the transaction. So we mention it here. The third transaction mentioned, bank charges rupees 5,000 which were credited into your account, which is a dividend. So bank credited the dividend of rupees 5,000 into your account. So this transaction refers to your passbook. So as it was supposed to be added, it refers to your wrong book, you subtract the transaction. So what do you do in this? If the transaction is supposed to increase or decrease your bank balance, that is supposed to be checked here. Now, as this transaction is a credit which is supposed to be received, which is not yet received. So that's when you need to understand whether this transaction refers to the cash book or to the passbook. So what do you feel, whether this transaction refers to the cash book or to the passbook now? Of course, this transaction refers to the passbook. Now, whether this transaction has been already mentioned in the passbook is a concern. Yes, it has been already mentioned in the passbook. Now, the transaction has to be entered in the cash book. On which side of the cash book will this be recorded? Correct. This will be recorded on the addition side as it increases the balance. So, if it is addition and if it refers to the correct book, then you add the transaction. So, bank credit. The next transaction which we refer to is bank charges rupees 400 as expense. So bank charges which has been already an expense, so which has been already mentioned in your passbook. Now on which side of the passbook will this be mentioned to? Is on the debit side, where as that is an expense. So now if the expense has been already mentioned here, which is as subtraction, but this transaction has to be considered from the cash book because passbook has been already recorded with it. So let's see on the cash book side. On the cash book side, the transaction subtracts your balance. As the cash book is correct, then you follow the correct thing. That is, you subtract it. You put it on the subtraction side. This is this. So you total the amount and then you add up the amount into the final balance, and that's how you get the final balance as per the passbook. Let's total that. So the balance as per the passbook which has been mentioned here is 40,700. That is the total of 50,000 minus the subtraction of 9,300 which has been carried out in the sum here. So this is how you find out the bank reconciliation statement difference, and this is how you finalize the total tally of balance as per cash book and balance as per passbook. That's it. Thank you for the day. Thank you for watching the video. Keep subscribing to eKida. Thank you.